one of the keys to long-term success in the trading business is being able to hang around for a long period of time.
I believe the same. So it's all about consistency. It's not about taking one or two trades and GME or AMC and like making thousands of dollars. It's all about small wins, and it's all about generating positive expectancy in your portfolio, so that your winners are greater than losers.
So you're basically about 6:30, 7 in the morning till whenever.
So I wake up at 6 a.m. every morning.
Okay.
So I wake up 1.5 hours before the market opens.
Sure.
So that gives me enough time to do my due diligence before the market opens.
So tell me what your due diligence is.
So I have a long list of things I do. So first thing, I look at the futures.
Okay. Same with me.
Look at the futures, look at the VIX.
Me.
And I actually trade, SPY, QQQ, DIA, all that stuff.
Okay.
IWM. So I look at that, I'll switch to that and see where they are trading. And then what I do is I look at all the sectors, individual sectors like, financials, consumer discretionary. So around 15, 16 sectors. And what I try to do is I see which sectors are, I do mostly swing trading. So what I'll do is it's all about, and you guys do mean reversion too, but you do mean reversion with implied volatility.
Yeah, we do implied
price.
volatility instead of price.
Yeah, so I do price. Yeah. I do price mean reversion. So I'll see any sectors which are overextended either to the upside or downside. And then
what do you do? Make a mental note of this in the morning, or do you do you wait for the markets to open, or you already kind of have an idea of what you're looking at?
I literally know which price, which stock is trading at all the time without even looking at my screen.
Of course.
So when a stock is usually, or ETF is overextended, I already know that it is, and I'm looking for signs of mean reversion, and I use technical analysis to provide some confirmation. Also, I glance through my portfolio to see the existing trades that I have and if any trades need management. So before the market opens, I have a full plan ready for that day.
Are you pretty much product indifferent at this point?
When I started out, I had a really small list of stocks in my watch list, like around 20. Mm-hmm. Because my whole concept is that you need to be so intimately familiar with the price movement of your stock so that you can spot when the stock is overextended.
Okay.
So it was just 20 stocks. As I gained experience, now my list is around 200 stocks. Because I deliberately make an effort to know which stock is trading where.
Okay.
So by manually going through my watch list, I'm not disconnected. I'm always engaged with every stock.
Yeah. The market can change direction, like on a dime, as they say.
Exactly.
So sometimes you have to make adjustments. How often do you think you adjust stuff during the day?
Okay. So I try to keep my trading life really simple. So, for example, I don't do rolling. I buy ATM at the money spread.
Sure, that's what we do.
And my goal is to I shoot for 94% profit on that every trade that I do. So let's say I buy a dollar white spread on QQQ. I buy it for 50 cents and I sell it immediately, put a closing order for 97 cents at that time, which is 94% ROI on that trade.
I would do that too if I could pull it off, but I don't pull it off that often.
So that's what my bread and butter trade is. And then what I do is, instead of if the trade starts going against me, which it usually does because it's mean reversion trading. So with mean reversion, the whole concept is that you are keeping the long-term trend in mind, but you are going against the short-term trend. My trade lasts for 30 days. If by day 15, the trade is not going in my direction, then what I do is, if the trade has lost 50% of its initial value, I close the trade. So that's how I handle my losers.
I like that.
Yeah, and so going back to your question, that if we have a ping pong day like today, right? Market, it doesn't bother me much because my outlook is 30 days. And I do my due diligence before entering the trade. So I have been watching that stock for a long time to enter into a trade. Once I put on the trade, all I care about is following my rules about loss management and profit target. So
how often do you trade? How many times a day? Do you know?
So how many times a day? I guess I take all of my trades in the first 2 hours of the market opening.
Okay.
Yeah. So let's say I take 3 bullish trades for one expiration, and the expiration is 30 days away. By day 14, half of the time, the trades are flip flopping and not deep in the money.
Of course.
What I do is, if I see any signs of the markets futures, opening really deep red on any news, I start retrofitting that expiration with bear put spreads. So let's say I have 3 bull call spreads. I'll add 3 bear put spreads, so that if the markets turn against me, let's say market is showing a 300-point drop at open. So what that does is that I don't make any money from the expiration because it's canceling itself out.
I understand.
Yeah, but I don't lose anything. But if by day 14 the trades have gone in my direction and they're deep in the money, then I don't care, because by that time I'm generally safe. If within the first 10 days you will know if your trade is going against.
What's your rising star moment? And was it a certain return on capital? Give it to me. What do you think?
Okay, so I would say that, like I was sharing with you, that becoming a full-time trader is a process. It's not like on someday you wake up and you become a trader. So for me, that if you were to ask me what was that moment, it was the day I had more winners than losers. So the positive expectancy in my portfolio, that I could see that yes, I have losing trades, but overall my portfolio is gaining value. And then what I started doing was, I was doing an experiment on my own. I would take $2,500 and see if I can grow it into 25,000, which I know it sounds like crazy, big number, in a year's time. And I was able to do that consistently, but just by doing debit spreads and having a list of rules. And I did it many times. And in fact, I shared with you that in 2019, I started with $2,500. And again, by 2020, I grew it to 25,000. And that time what I did was, I was like, let me try to see if I can scale it up. So I continued that. And then by 2021, November, I was able to take it to $210,000.
2,500 to 210,000?
That's just repeating the same method, which I had been doing for many years, but just scaling it up by adding more contracts.
Yeah, sure. No, that's fine.
Yeah.
But that's pretty amazing, because a lot of people will start with, a few $1,000s. The other side of it is, I also don't want people to get discouraged thinking, well, I'm just going to lose $2,500, because that's not the case. And you're a walking, talking, living example of that. And you said you've done it multiple times, from 2,500 to 25,000. The other side of it is, I also don't want people to get discouraged thinking, well, I'm just going to lose $2,500, because that's not the case. And you're a walking, talking, living example of that. And you said you've done it multiple times, from 2,500 to 25,000. That means you've also had some bad streaks too.
Yeah.
And talk to me about some of your bad streaks that you've learned from.
Sure, yeah. And so I have blown out my accounts many times. First of all, let me start with that.
Yeah, okay.
And that's how I learned.
As we all have.
Yeah, that's how I learned. And I was sharing with one of your team members, Jules, that what I did for many years was that I would start with 2,500, and the moment I would hit 25,000, it could be any target. It could be like, let's say your target is 10,000, right? I would withdraw that money and put it into my bank account and reset at 2,500. And the reason why I did that was because when I was learning trading, I have done this many times, that I would grow my account over a period of 2-3 years and just celebrate my paper victories. And then one bad correction, like 2022, one bear market, one bad correction, brings you to zero. So that was a very defeating feeling. And so what I did was, every time I would reach a target, I would withdraw that money and start all over again. So because of that, I've had some failures when I was trying to do my own 25,000 challenge, I call these. But the thing is, it doesn't cause a big dent, because I keep withdrawing money from my account. And the bigger the 2,500 to 210,000 achievement that I made, that was my first experiment into, can I scale this method?
That's great. Yeah. I mean, that's unbelievable. There's a lot of things you do, like taking the money out of the account, like the long debit spreads, regardless of volatility, the more directional swing trades. There's a lot of things you do that we don't really we don't preach here. We have a different style of trading. You know, we don't play for mean reversion in price, although we do naturally. We don't like talk about it, but they're more for mean reversion and volatility. But it's so funny. What's important, the important takeaway is that a lot of people are going to realize that there's lots of different ways to play this game.
Okay.
I know I'm putting you on the spot here, but give me your top 3 rules.
Sure. Okay. So rule number 1 would be finding the right stocks to trade, right? So trade options.
Okay.
So maybe you have a price criteria, liquidity criteria.
Sure.
So
I have a liquidity criteria first, price second.
Yeah. So I have like 10 items in my criteria how I select stocks. So that's one rule. The second is when to enter trades. So you don't have to trade every day. I mean, I take between 700 to 1,000 trades a year. So I'm not like you guys. I don't know how many trades you take.
Like 15,000 probably.
Yeah. So you guys are you guys are up there.
It's insane.
So I do 700 to 1,000 trades.
That's good. That's 700 to 1,000 trades. That's legit. You're a full-time trader.
Yeah.
Sure.
So the rule is I have clearly defined rules of when to enter a trade, whether it's using technical analysis or watching the markets in general, like the macro environment, avoiding when to get into trades like earnings events and all that stuff.
Okay.
And then, like I was telling you, that positive expectancy is such a big thing that I keep in mind, that when trades go against me, since my trades are 30 days out, like I don't panic if on day one
that's great.
It starts going against me, because I have rules for cutting my trades when they start losing. So I have this 50% loss rule, that if a trade loses 50% of its initial investment, then I cut it. And as long as I can maintain that winners greater than losers equation in every expiration, that's all I care about.
How has the down move in 2020 been for you?
2022?
2022. Sorry.
So this year was like unprecedented, as you know. Like I don't know how many decades we have seen this. Six months.
It's been a rough first 6-7 months. Yeah,
it's been
8
a very
months
rough
now.
year. So I only give you 3 rules, but I have many more rules. So one of the rules I have is that I only trade 30% of my portfolio. So I always save 70% cash in case.
Don't worry, that's one of our rules too. So we're good. Yeah, okay. Pretty damn close.
Okay, so I save that cash all the time, no matter what happens, no matter how good I feel about the markets, in case the markets turn against me, so that I can bail myself out of a bad situation. So once markets start going against me, and I start seeing, and what will happen is, since I do a lot of bull call spreads, let's say I have 5 trades on, and for next 4 weeks, and markets start going against me. If you go into a correction, like a 10% correction or something, all those trades have the potential of becoming losers at that point.
Of course.
So what I do is I wait for the markets to take their time, fall wherever they want to, and I use technical analysis to spot when they might be turning around. There is no guarantee that they will turn around.
Of course.
But when I see higher highs, higher lows, there are simple things you can do to see they are turning around. Then I dip into my reserves, the next 30%, to take one additional trade for each of the losers that appear to be losers. So I try to balance out that way.
It's another thing we don't do. You break a lot of Tom's rules here, but it's okay because it works for you.
Okay.
I mean, I'm all for it. Nishant, that was a really good discussion. And I think my favorite takeaway is just that everybody can have different, a little bit different set of rules, as long as you're committed to the course, as long as you're committed to as long as you have the passion to commit to the space. There's lots of different ways you can approach it and get from point A to point B, and you've clearly shown that. Continued amazing success. I hope your daughter keeps trading as well.
Yeah, I hope so too.
And let's stay in touch, see how it goes. This is a great talk. Thanks so much.
Yeah, thank you so much.